Okay, so good morning, everybody. We start the streaming for today, which is the 17th of April 2023. And we are doing the weekly update. So on Friday, we went short at this top here. We had some resistances on the work chart. We banked some 80, 90 pips on this move, if I remember well. I even didn't check that. Yeah, 90 something. So now we are here. From the setup point of view, if we look at the setup we have on the MOMEX, which is the momentum indicator, we have a little bit weird, not weird, but not complicated, a little bit balanced situation, I would say. So you see the weekly is still very high. When we are here on the weekly, we mostly always post a red weekly candle after that. So we need to see a deeper pullback on the Euro USD. It can happen intra-week. It's possible we push higher before we look lower, because you see the 4 hour is very low. So this one need to breathe. But despite this, we have here some fuel for more pullback, and that's what I'm looking at. I look on the past. If you look here, this is the weekly chart with the 7 and the 14 period MOMEX. You see, mostly whenever we have had this thing, we always posted a red candle like this one before breaking the high of the initial signal. Same here. Well, here it was a much bigger move. Same there. So it's it's catching my attention, and that's why I went short this morning a little bit. I still think we can look deeper because of that configuration with the weekly that need to breathe. It need to breathe, and for that it need to post at least one red candle, and it could be more. For now, it's a little bit difficult to see how far will go this pullback, but what I see is we need more pullback. So there is two solutions. Or we did from here and we break the lows, look for the next level, and we have that inside the work chart we have here. We have all the level we need there to be able to get long, because the idea is, of course, to get long as soon as we can. The very nice area to get long for us is this 2140 fib here at 109.26, which is what I show here. So or we break and look there first by the beginning of the week and then fly higher, but in this case we would still not post a red candle, which is a little bit my problem, because we need this weekly red candle. Or we go a little bit higher inside Monday and Tuesday, and then we pull back and end the week in this area after starting a bounce or something like that. In that case, we would post a nice, or we bounce a little bit, but we still have a nice weekly candle here, red. So that's what we have. The other option, this is the previous high. You remember the high of the 23rd of February we have here in green. That was the old 1140 fib. I keep it here because that fib created an area of support and resistances. So we should see some reaction here. And at the same time, we have the 2360, what could be, as soon as this low stays in place, that could be that ABC up that is looking perfectly here, still to this big 1466 target, which is our target since a long time. And there we would have this confluence with the 61.8, which is what I said, I think, already last week on Friday when we did this simulation. What happened last week is we broke 40 pips above this one, but we didn't post a weekly close above the previous highs yet. So we found some sellers here. Market has squeezed along, and I think that will happen again. We will squeeze long before making a deeper pullback to scare a little bit the long, and then that's when we would go higher. Okay. Another important thing we observed last week again is that we are disconnected from data. Despite bad or good data, either on the euro or on the USD, market is very easily going opposite side without any apparent reason. So data traders are probably a little bit shaked because it's complicated now to trade data, of course. So here, as soon as this would be in place, this 38 fib would be a reaction on the upside, and that's something we have to keep in mind. Upside this level and that level, of course, plus the other level we have inside our work chart of the trading room, which is giving us all the inside day levels that we can play with small setups. So we will look for that. The other thing we have to look at now, we have the open in a few minutes. If we break higher, we have there the 4-hour 2021 exponential moving average in confluence with the 1-hour 2021 exponential moving average, which is creating a confluence here of dynamic support resistances. If we would break through them inside the open and look in that area, I would try to short again whenever I will have a good resistance with a time pivot or something like this. So if we would go higher inside the open till 8:30 or something like this, or later, depending, I would be happy to be able to short it here if I have again a setup like I had there. I only banked 9 pips here, but I don't feel very comfortable getting long looking at the fuel we have for a deeper pullback now. So it will be tricky. It will not be comfortable, of course, because if we get long, we can see a little bit more price action on the upside. You see the price action is more on the upside now. This is a 15-minute chart. It should be 10, 15. It should be 10 minutes. It should be 15, so I changed to 15. We have there too some trend line, very important trend line, because this is the channel. Let me show you. This is the channel we have. It's not that one, so I had to reduce my chart. So it's another channel we have, and that's important fib of that channel. It's the 2140, the 2360 of that channel. I will paste it here. That's the only thing I can do now with this new restriction from TradingView. What is this? Okay. So I have to keep with maximum 50 chart open, and that's really a nightmare for me. So that's what I wanted to say about this one for now. Concerning DXY, we stopped on this volume area here. If we break higher, we would have, of course, this very important here would be the QPOC 1, 2, 3. As soon as we get in this area, this will be a very, very, very important area. If we would break higher on the DXY over there, from the volume point of view, this area is very important. It's not the same data as the other one we are using because this is capital.com, but we must look at this closely. If we would go higher, which means Euro USD would go lower, of course, then, and we would probably unfold a kind of ABC up here. If we consider this as an ABC up, let's take it, I do it roughly here, but you see we are coming mostly in this area, and this is the 100% extension, so probably the 6180 is in here. So that's really a very important area to look at when we will get there. Even if we don't get there immediately, we start going lower a little bit, then we should look at that, which would help to post the Euro USD weekly red candle, and we have to look at this. On the other hand, so which would be probably in that area of the DXY, where we have the QPOC, which is the one I show you, and some very important fib here, plus this pivot here. It's the weekly pivot of last week, so we have to look at the pivot of this week. The weekly pivot is over there, which would be a little bit hard to break. So when we would come there, we would see a resistance. This is very important to be broken, so we will see another big resistance here, and the next big one will be in that area. So I draw last week this AA area either on EURUSD and DXY. So if we would go lower, which is still possible before we would post this red EURUSD candle, which means EURUSD, we take the high in place and we go a little bit higher, we still have that very important AA configuration that I showed last week here, okay, which would probably see this A area with the Q block, a very important 3820 fib of that ABC up, the one I just showed there, that one. So we have it here, and at the same time we would probably see there. So if we break a little bit higher and do not pull back as we saw here on the previous high or on the actual high, then we would go to the 38.2, and that's when we would have this configuration of the AA areas of the DXY and the EURUSD. So we have had the open. Meanwhile, I was doing this little briefing. No big reaction yet, so we probably, I was expecting to see a little bit of push upside on the open, which would be the best scenario from a price action point of view, a little bit of upside move. Why not up to these previous highs, which is, where is this high? So I will mark it better because it is a very important area. Where are we? Oops, sorry. This is what we did. You saw how well this 2360 fib has reacted. It's the same. I don't think we can break it like this. It's not a butter. It's not a butter fib. It's a strong one. So we stopped on it. We pulled back from it, which is why we went short over there. We had a very nice setup. So now if we go a little bit higher and we would retest the previous high of February 13th, I need to go in bigger time frame just to see this high in place, which is there. This so it's the pink fib over there. Okay, so we go back to the 15-minute, so it would be there. So if we, I will highlight this one because, I will highlight this one because it's an important area to look at. It's the one I just mentioned on the other chart. So pull back, a bounce to this area would be a sell for me, and even a little bit before probably here. That depends on the time we would get there. As usually, we know that very well in the trading room. Okay, so I would expect a push now. I would love to get there in the next time pivot around 9:30. That would be great, really great. And then see if we can short it, unless we go a little bit higher till tomorrow morning or something like that. And then would like to short that again before ideally being long there on the 2140 at 109.27. That would really be my, let's say, my dream scenario. Okay, I will stop the recording now.